If you're struggling with scalping, in this video I'm going to give you my personal strategy that I used to make $17,000 in profit from May to June, and I'll put that on the screen right now. So this is the exact strategy that I used to make the profit. However, there's one main thing that you need to understand. Scalping is not for everyone, day trading is not for everyone, and neither is swing trading. And how can you know which is for you? Well, this all comes down to your personality. What kind of trader you are and what kind of person you are. I like to scalp because I like to be in and out of the market as soon as possible. However, most people can't scalp because it doesn't suit their personality. They are better off as being day traders or position holders such as swing trading. So the first part of this video, we are going to nail down what kind of trader you are and which method you should be focusing on to yield you more profit and make you profitable in the long run. And then we're going to go over my scalping strategy, which you guys can use, and is heavily reliant on the M15 chart because I'm going to show you guys a new world that opens up when you treat your M15 chart as the daily chart. So if you guys are finding my videos useful, make sure to leave a like on this video so I know to make more content like this. And I also will be hosting free classes inside of my Discord and also live trading. So if you guys want to come into that, make sure to go to the description down below and click on the link to my Discord. Other than that, let's get into the video and teach you guys how to scalp. Okay, so we're going to get into my scalping strategy. It's called Nebula, and I want you guys to understand that there's two types of traders out there. There's a continuation trader and a reversal trader. And in this video, I'm going to teach you in my strategy how you can become a continuation trader. Being a continuation trader is probably one of the easiest ways to trade inside of the market. With this model, it can yield you a 65% win rate if you listen to what I say and you follow the steps one by one. If you're looking to trade before this model forms or you're trading without any of the steps being there, this is where you'll result in the losses. This is a completely mechanical strategy that you can use to help you get funded and get payout. So follow the steps one by one, and everything I teach you, just follow it exactly. If you find success with this model or you find something new within the model, tag me on Twitter and I'll reshare it. Other than that, let's get into the video and let's teach you guys how you can become a continuation trader. So the key component to this model is the London session and the Asian range. So we will be using the London session. This is where we are going to look to trade and frame our trades. However, you are not looking to trade at the start of the session. You will be looking to frame your trades after 3 AM. So we are going to get into that. However, the key important place is the Asian range right here. So within the Asian range, you are looking for a range which is continuing to the upside, and it is a large range. So for example, this is a bullish market, and if we have a range which is over 100 points, this is ideal for looking for a continuation. So what do I mean by this? So this is the Asian range, this is the Asia low, and this is the Asia high. So if we are looking for a bullish market, we are trading to the upside, and this is where the range stops. And we have the London session, we open up, and we trade above the Asia high. So how can we know that the Asia low is going to be protected? Well, this is where my model comes into play. So this range is over 100 points. So this is ideal for us to look for a continuation. So why is it ideal for us to look for a continuation and not look for the market to reverse and take out the Asia low? Well, this is because we've already had a large range. So when we have a large range inside of Asia, we will expect London to trade into 50% of this range. So 50% is important. So let's break this down again. We look at the Asia range, and what do? We measure out the Asia range. So how big was the range? If it's over 100 points, we are expecting a continuation. And where are we expecting a continuation from? 50% of the Asia range. So we look for the market to trade back into 50%, and this is where your SMTs will form. And the best SMTs form at 50% of this range when it is over 100 points. So if we have an SMT, we look for a change in the state of delivery, and we let the market target the buy side liquidity again. So this is an example when we are bullish and the market is trending to the upside. Let's go over an example when we are bearish. Bearish, we are trading to the downside. And what do we look for within the Asia range right here? We look for a range which is over 100 points. And when we have 100 points range, we are looking for it to continue lower and at the London session open up below the Asia range. And we are not looking for the market to target the Asia high. Why not? Because we have over 100 points range right here. As we have over 100 points range, we are looking at 50% of the Asia range. And this is where the market can trade back into. And what do we look for at these levels? We look for SMTs at 50% of the Asia range, and then a change in the state of delivery for the market to continue and trade lower. This model is perfect because you listen to this video, I've just taught you when not to target the other side of the Asia range. So a lot of traders look for an Asia low sweep, then an Asia high sweep. And I just showed you guys when the market is not going to target an Asia high or an Asia low. So this is the basic understanding on my scalping strategy. However, I'm going to give you a checklist right now, and it's going to go into a bit more detail. This is the exact checklist that you'll be using for this strategy. So the first things first, you look at the Asia range. So we are looking for the Asia range to be over 100 points. The ideal scenario is for the points to be over 200. If it's not over 100 points, then we are not looking to trade. And you are also looking for the Asia range to be trending. So either it's a clear bullish market or it's a clear bearish market. If it's a consolidation, you are not looking to trade. This is no trade time. So it's either going to be a upside move or a downside move, because this is where we can look for the continuations for this model. And you are only going to trade after 3 a.m. So even if the setup forms before 3 a.m, you are not looking to trade. You are framing all your trades after 3 a.m. And then we look at a time frame alignment of M15, M5 and M1. So the M15, this is where we look for the retracement for the market to trade back into the area that it made the continuation. So if we are bearish, we are looking for an M15 pullback into 50% of the Asia range. And this is where we look for an SMT, and then we drop down to an M5. We look for a change in the state of delivery, and then an M1 entry, and we target the sell side liquidity if we are bearish. So this is how we will be aligning timeframes, and then having our entry for a change in the state of delivery. And finally, we will target a 1 to 2. So this is all there is to this model. And now we're going to go over some chart examples regarding this strategy for a much more easier understanding for you guys. If you're enjoying this video or you want to see a New York session based strategy, if we can get this video to 500 likes, I will upload that video this coming weekend. So make sure to leave a like on this video if you made it this far. And now let's go over some chart examples. Okay, I'm going to go over a chart example for you of how this model forms step by step. So the number one thing, what are we waiting for? We are waiting for the Asia range to form. So the Asia range starts forming at 8 p.m. midnight, and it stops at midnight open New York time. So whatever the range is inside of here, what are we looking for? We are looking for the market to have a over 100 points range inside of Asia. So all we do now is wait for the market to print and let it do its thing in Asia. So when you get on the charts, what is the next thing you will do? You will mark out Asia low, and then you will drag it to Asia high, and you will look for the range it moved. So you guys can see that this moved over 200 points. So what is the ideal scenario for this model to work? It's if we are above 200 points within the Asia range, so we can map out 50% of this range. So the next step is mapping out 50% when we have over 100 points range, which we do. And this is where it's going to become important, because we are going to look for the market. If we break down lower and have a change in the state of delivery, we are going to start using 50% to look for selling opportunities. So as you guys can see, the model is coming together. We had our Asia range and it's above 100 points. It's actually in an ideal scenario where it's above 200 points, and we mapped out 50% right here. What is the next thing we do? Well, the third step is we wait, and we wait for 3 a.m. So this is the red line for 3 a.m. and we are looking to trade after 3 a.m. So after 3 a.m, what do we look for? Well, we look for an M15 retracement into 50% of this Asia range, and then we look for an M5 change in the state of delivery for an M1 entry, and we target a 1 to 2. So the next thing we do is wait for 3 a.m. As you guys can see that this is 3 a.m. and this is 50% of the Asia range. So what do we look for? Well, we look for a change in the state of delivery. So once we close below these green candles right here, this is where we had a change in the state of delivery, and order blocks which change the state of delivery are high probability. And here, as you guys can see, we trade into the order blocks and trade away. Then we have these green candles right here. These are our propulsion blocks, and the market trades back into them. So as you guys can see here, M15 retracement, M5 change in the state of delivery, and M1 entry. So in this fractal right here, we had an M15 change in the state of delivery already. So we already have a bearish bias forming, and we are not looking for the market to trade above Asia high, because we are anticipating a continuation to the downside. On the M5 chart, you guys can see that we have 50% of the range right here, and the market is sensitive around this area, and we have sell side liquidity which is resting below all of these lows. So this is what we are going to target, and you can see that we had a change in the state of delivery. Once we close below, these green candles. And you guys can see once we trade into them, we are sensitive and we react away. So order blocks, as I said, which change the state of delivery, are sensitive. So after the M5, as we've had a change in the state of delivery, we are going to move on to the M1 and we are going to look for an entry. So on the M1 chart, you guys can see these green candles right here. They're from the M5 chart. And this is where we change the state of delivery. The market trades into them and we trade away. So you can see these bullish fair value gaps right here. These were meant to support price to go to the upside, however they didn't, and we traded lower and we broke the fair value gaps. So these fair value gaps now become an inversion level, and this is where we can sell from and target the sell side liquidity. And what are we waiting for? And this is where we can sell from with a stop loss above the high that traded into the order blocks which change the state of delivery, and then we will target the sell side liquidity for a 1 to 2. And as you guys can see, we trade into the fair value gaps and we're respecting the inversion levels. And then we have a breakdown to the downside into the sell side liquidity. And there we go, we trade into our full take profit. So this is how simple my strategy is. It's called Nebula, and this is the full breakdown and checklist for it. So this is how you can know when an Asia high or an Asia low is going to be protected. It's when we have a range which is more than 100 points, and if the range is more than 200 points, we can anticipate the market is going to leave one side of the Asia range untapped. So you can see, what do we wait for? We wait for the Asia range to form. Once the Asia range forms, then we wait to see if the range is more than 100 points. If it's more than 200 points, we know that this is going to be a good trading day. And as you can see right here, this was 50% of the Asia range. We trade into it and we are sensitive. And then we trade lower. And then we wait for 3 a.m. So this was 3 a.m. and the market trades higher. We have a change in the state of delivery on the M5. After 3 a.m. we have an M15 retracement into an area of fair value, and then on the M5 we have a change in the state of delivery. Then on the M1 we are looking for a very simple and very basic entry technique. This was where a bullish fair value gap failed, and we are going to use it as an inversion level and look for selling to target a 1 to 2. So this was the step-by-step guide to my model, which is Nebula. It has helped me pass a lot of funded accounts and get payouts, and I hope it can do the same for you guys. If you find success using this model, make sure to tag me on Twitter and I will reshare it. And keep in mind that I am rooting for you and I hope you find success in this business. Other than that, as always, thanks for watching and have a good rest of your day.